come from the BOJ either, but we are watching sovereign debt markets. We do have auctions in the U.S. We have the Treasury with its views of quarterly debt sales.
Yes, we do, and we also have, of course, these days, central bank guidance is a dirty word almost, but we will have those indications of what is or is not coming next. There's the potential that the BOJ in particular will, now that the trade situation has become calmer, make it clearer that it is biased to hike rates sooner rather than later. And if it doesn't, then that would be a big risk for the long end. We saw declines in long end yields for JGBs at the end of last week on the potential for BOJ hikes. So that's something to watch. In the US, the action is more towards the other end, in that while there's been some signals that there will be dissent, overall the tone from the majority, and including Jay Powell, has been more towards holding rates for the moment because they're worried about the impact of tariffs on inflation. That impact is becoming apparent, and there's also the impact of this drumbeat of criticism of the Fed from the government that it should be cutting rates, which paradoxically makes it harder for the Fed to cut rates because it doesn't want to be seen to be giving in. So given that commentary, given what their concerns about inflation, the Fed is really going to need to see a major deterioration in data before it says, okay, we're going to cut rates, which means that the data that comes out after the Fed, the jobs report, that will do a lot, at least for how rates traders position themselves going forward, whether we're going to see just one cut this year, or whether we're going to see two. A lot of that's going to depend on the data, along with this volatility-inducing potential from what the FOMC says in and after the meeting, and how Trump and Bessent and Lutnick respond to that, and whether we get this continuation of the conflict between the US government and the US central bank, a conflict that cements the down path for the US dollar.
Bloomberg's Garfield Reynolds there with some of the big questions that we're watching, perhaps beyond just the policy settings from the Fed this week. But take a look at how all of this, the trade cross currents is playing into the picture for commodities. Brent crude up by just about 0.1%. We did see some weakness as we saw the dollar strengthening, conviction really waning that the US will kind of reach the agreements. But of course, now we have had that securing of the 15% tariff pact with the EU, and potentially also an extension of the deadline with a trade truce with China as well. Iron ore off by just about 1.3%. Some concerns over those industrial production numbers out of China, despite, of course, some of that sort of rebalancing when it comes to steel making capacity in China still underway. We're also seeing gold off by just about 0.2% at the moment. Most metals at the moment are kind of drifting a little bit lower as we get into a very risk-heavy week, particularly when it comes to monetary policy. More ahead on the Asia trade. This is Bloomberg.
Season is here.
The earnings are front and center. The slew of results already out.
Are tariffs going to eat into margins?
Bloomberg is first to break the numbers.
JP Morgan, Citi, Wells Fargo, Bank of America, Goldman, Morgan Stanley.
I'm getting my spreadsheets ready.
With the smartest insights.
It's going to be a can-kicking situation.
Expectations are relatively low.
The market is looking for confirmation of that growth narrative.
Continuing coverage on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
Take a look at how Japanese assets are setting up for the market opens in about 20 minutes. We do have the Bank of Japan policy decision. No change expected this week after the U.S. and Japan already struck a trade deal. Of course, we have seen Japanese stocks really gaining ground on that decision. The RSI on the TOPIX already in the overbought territory. But what we'll be watching also, of course, is the political landscape in Japan. Prime Minister Shigeru Ishiba says he won't step down despite mounting pressure from within his party after bruising upper house election. Ishiba insists he must stay to oversee the new U.S.-Japan trade deal. However, a new Nikkei poll suggests his cabinet's approval rating has slipped 5 points to 32%. Let's bring in Bloomberg opinion columnist Garfield Critical. So how much does this really matter to Prime Minister Ishiba? He was never a particularly popular prime minister, and it took him so long to get here.
Yeah, it's maybe that's one of the reasons that he's digging in for so long. As you say, he spent a long time, his entire political career really, to becoming prime minister, running 5 separate times to be leader of the Liberal Democratic Party. He's really digging in now. You mentioned there the Nikkei poll, and there was other polling that saw his numbers drop, as we would expect. There was also a very odd poll yesterday from the Mainichi that saw his cabinet approval rating go up despite the election defeat, and also listed him as the person most suitable to be prime minister. In other words, people responding to the poll were saying that he should stay on as prime minister. It's a very confusing situation right now in Tokyo. I can't recall seeing something like this where we saw multiple media reports that suggested basically that his resignation was imminent. And he himself is digging in and saying he's not going anywhere. It's quite an extraordinary situation, and I think it's going to continue to be a point of focus over the next coming weeks until we get some sort of clarity about his future.
And that sort of suggests that it could swing in many ways, right? How much does it also depend on exactly what we actually see in the details of this trade deal?
I think that might be one of the things that is in focus is Ishiba wants to stay on, so he gets these details ironed out. There does seem to be, despite the agreement last week, there seems to be a huge gap in between the expectations on both party sides, or at least what they're saying in public about what they believe the agreement was. Ishiba, may want to continue to use this as an excuse as well to stay on and say, well, despite the election defeats, this is the deal that I have negotiated, so I need to stay on until we have something in writing. We see in I think in a lot of these deals there's a big gap, a comprehension gap between the two sides, and I think when it comes to Ishiba, we're going to have to see where it goes and whether he's even still in power now. The LDP may try to remove him using a recall process, basically to choose a new leader. So he might ultimately not have all the power in this matter. We'll have to see if he's able to stay on and iron out these details with the Trump administration.
Bloomberg opinion columnist Garfield Critical there with the latest on the political landscape here in Japan. We're also, of course, following the tech landscape. Children of the 80s and 90s would remember the logo of TDK during the era of cassettes when the company dominated the magnetic tape space. And, well, that technology is now just a relic of the pre-digital era. TDK is hoping to remain at the forefront of tech innovation. Through its 7C strategy, the company remains a major player in designing and manufacturing components from batteries to sensors that enable the latest technologies. I spoke to CEO Noburo Saito and began by asking how they're seeing the trade deal between the U.S. and Japan.
We will need to understand more in details about this particular, Japan case. And of course, we'll need to keep monitoring the other cases, not only limited to here in Japan, but also the other countries.
At least, is it a brighter outlook than when you told us earlier this year that you could take an operating profit hit of about 10% for fiscal 2026 year on year because of the uncertainty, partly related to tariffs?
Yeah, It's first time for our company TDK that we made a kind of two scenarios that facing this kind of a very dynamic situation. But I hope that the impact is going to be minimized. But it's actually out of our control.
Have you seen the impact so far?
A little bit.
Are we talking about costs? Are we talking about demand globally?
Actually, overall. I cannot pick up only one. That kind of impact is kind of on broader basis. Right.
Should I assume that's also a lot to do with China because more than 50% of your revenue comes from China?
China is one of the our major business market. But again, as I said, we're doing business on global basis.
China-U.S. tech rivalry continues, and we know that when it comes to TDK, you do have subsidiary Amperex assembling batteries in China. Have you heard any concerns about China-made parts?
Yeah, actually, even before we started facing this situation, that we have been proceeding our kind of strategy about the production site called China Plus. China for TDK remains extremely important market for the future as well. But in addition, we have already started, expanding our production site of battery into India.
The new factory in India is supposed to go online in September. Is that on track?
On track, yes.
What are you seeing as the ratios between production and demand when it comes to India versus China?
At this moment, India, much smaller.
Artificial intelligence, of course, is very important for TDK, especially when you want to grow the ecosystem around AI. How does the China market play into that? Because China seems to be a very isolated case when it comes to tech development and AI as well, as opposed to the rest of the world.
We see this AI market as an AI ecosystem. Not only these popular applications, but also like a smartphone or ADAS in automotive. Such kind of the wider scope of the application we are defining like AI ecosystem, which will be positively contributing to the transformation of society.
Because you have a new generation of batteries to power these smartphones as well for AI tasks, right? And your biggest consumers are Apple and Samsung. So tell us a little bit about how that market is growing right now for TDK and how important that is.
The development of data traffic in the smartphone, that the higher energy density battery, will be more and more required. That's kind of trend, I see. Therefore, with our, unique kind of technology, we will be able to make a bigger contribution to this growing, demand.
Is that why you're adopting also a strategy of buying out more companies that are in a way related to artificial intelligence? I understand that you recently acquired SoftEye, for example, which also deals with smart glasses.
This SoftEye, which we newly acquired, is providing kind of the eye tracking and also object recognition together with ultra compact battery, several sensors, electronic components, plus such kind of the very differentiated with ultra low power solution is going to contribute a lot also to develop this future growing applications.
When it comes to developing these new technologies, where are your R&D centers as well, and how much are you investing in trying to get all of this brain power for these new innovations?
TDK keeps investing 10% for R&D, not only looking at the short term, but also looking at long term. So new product or new technology, which will be growing in the long term, also will be contributing to the huge problem looking at this AI ecosystem development. Power consumption is a huge challenge or problem in the coming future. But for us TDK, this power consumption, the challenge is an opportunity.
TDK CEO Noboru Sato, they're speaking with Sherry earlier. We do have some breaking news when it comes to the CK Hutchison development, saying that they may invite a Chinese investor to join their port deal. CK Hutchison remaining in discussions with members of the consortium with a view to inviting a major strategic investor from China to join as a significant member of the consortium. That's according to its latest HKX filing. And we have seen sort of regained enthusiasm from investors for CK Hutch, despite that delay that we've seen in the company's Chinese plans to sell ports. That optimism has been fueled by news that some investors, including the likes of China COSCO Shipping, are finding its way into that global deal. So that possible involvement is perhaps what we're seeing that sort of alluding to in this latest HKX filing. CK Hutch remaining in discussions with members of the consortium. The view is to invite a major strategic investor from China to join as a member of that consortium. Sherry.
We now have breaking news also on Samsung. We're now hearing that it signed a 22.8 trillion won chip manufacturing deal with a client. We don't have more details than that, but we know that Samsung, of course, has suffered when it comes to chip manufacturing, especially when it comes to advanced semiconductors. Its profit fell for the first time since 2023. We're talking about a 56% plunge in operating income for the June quarter, although it's been reasserting its position as the top Korean stock, with its share rising about 10% in July. And we are now hearing from sources that Samsung has signed a 22.8 trillion won chip manufacturing deal with a client. We have more ahead. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Welcome back. Already this year's best performing major market, South Korean stocks are becoming a magnet for foreign investors thanks to regulatory reforms. Asia Equities reporter Sang-mi Cha joins us now with the latest. And Sang-mi, what a difference just a few months makes, especially after the presidential election, with more clarity on the political landscape. What are we seeing in terms of inflows?
Yeah, well, the overseas funds that had dumped Korean stocks over the past 9 months have piled back in, starting in May and June. They have bought about 2.9 billion. And in July alone, we're seeing about 3 billion that they have added. So we're seeing this trend that all the foreign investors are coming back to Korea after the martial law, the challenge that they have experienced. And then obviously after the June election, that is actually boosting the markets right now. We see some of the Wall Street banks like JP Morgan, Goldman Sachs, and Citigroup all upgraded Korea stocks starting from June. And JP Morgan has actually put out a very bullish sentiment where they said that they expect KOSPI, the benchmark KOSPI, to reach 5,000 over 2 years. That's from 3,200 levels that we're seeing right now. That actually echoes that ambitious goal the current administration actually has to actually boost KOSPI to 5,000, and they have come up with an ad hoc committee called KOSPI 5,000 to actually tackle that. And all this goes back to the idea of resolving Korea discount. Korean companies are undervalued relative to their peers in Japan or Taiwan precisely because of that poor corporate governance that has been a long overdue issue. And obviously obviously that is because of that weak shareholder rights. And so there's that optimism now that this government is actually serious about tackling that Korea discount.
So what are we expecting when it comes to the next rounds of reforms?
Well, in the beginning of this month, we've seen the first round of revision to the commercial code pass, and that has allowed the fiduciary duty of the board members. So that makes board members accountable for all the shareholders. Now, we're expecting another round to that revision, and that would be including the cumulative voting, which would allow a lot of the minority shareholders to actually voice their rights and potentially elect at least one member of the board that is in favor of their interests. And so that would be a pretty significant change in terms of corporate code that we have been seeing, and that would, and then there are other rounds that is expected.
Sang-Mi Cha, Bloomberg's Asia equities reporter, as we head towards the Korea market opens. Also Japan, take a look at how we're setting up for the session. We are seeing Nikkei futures gaining to the upside of 0.25% at a time when we're following Samsung as well in South Korea has just signed a 23 trillion won chip manufacturing deal with an unnamed client. The market opens are next. This is Bloomberg.
In case you missed it on Balance of Power.
Administration officials have maintained today that the objective was solely to focus on Iran's nuclear capabilities, that this objective was not regime change. But, sir, even if it wasn't the objective, could that still be the end result, and how?
I think regime change has to be the objective because the Ayatollahs are never going to give up their pursuit of nuclear weapons. They have to be forced out of power. That's the only shot we have at really lasting peace and security in the Middle East. And a strike like this, and potentially others, can disrupt the regime, can destabilize it. Look at the choice that the top military officials and key Ayatollahs now have to face after the U.S. attack. Now they have to make a choice. Do they want to take on a second military adversary in the form of the United States? They may well do it, but they would be making a big mistake from the point of view of regime survival.
Don't miss Balance of Power live every weekday.
Earnings season is here.
The earnings are front and center. The slew of results already out.
Are tariffs going to eat into margins?
Bloomberg is first to break the numbers.
JP Morgan, Citi, Wells Fargo, Bank of America, Goldman, Morgan Stanley.
I'm getting my spreadsheets ready.
With the smartest insights.
It's going to be a can-kicking situation.
Expectations are relatively low.
The market is looking for confirmation of that growth narrative.
Continuing coverage on Bloomberg. Context changes everything.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. It's a busy week. We have 40% of the SP500 companies reporting earnings this week, the busiest in the earnings season. Central bank decisions in the U.S., Japan, and of course, hiding that trade deal between the U.S. and the EU as well.
Yeah, we were talking just late last week about this sort of 15% baseline being potentially a new prototype after that was reached with Japan. And it looks like the EU has that benefit too. Plus, also potentially that pushing back of negotiations with China by another 90 days is what we're hearing.
And it was that trade deal that you mentioned, Heidi, with Japan that sent Japanese stocks on a tear. We're talking about the TOPIX 14-day RSI already being in overbought territory. Japanese stocks fell a little bit on the Friday session, but we continue to watch for more upside, given, of course, the optimism right now and the global risk sentiment. We are watching the Japanese yen holding at that 148 level on a week, of course, when we do have the Bank of Japan policy decision. No change expected this month, but do watch out for the JGB space because 2-year yields are already near highs that we haven't seen in 17 years. Nikkei futures pointing to the upside of 0.2%. Take a look at how South Korea is also coming online because one stock that we'll be watching there is Samsung. It's now announced a 22.8 trillion won chip manufacturing deal with what it calls a major global company that it hasn't named. You can see the pop right there of more than 3% at the open. When we do have the Korean won also strengthening against the US dollar, the KOSPI has been one of the best performing major markets in the world, and we're talking about inflows just for this month from overseas of more than $3 billion, Heidi.
Take a look at where we're shaping up when it comes to just that staggered start to trading here in Australia. We're seeing a bit of upside, about 0.1% there. Of course, a lot of these trade cross currents, positive as they are, will be positive as a proxy for Australia as well, particularly if there is that extension of that US-China truce. Of course, the Aussie dollar trades as a strong correlation to any sort of positivity or negativity when it comes to China-related news. And positivity would be appreciated given some of the domestic data, particularly when it comes to industrial production, has not been particularly encouraging. Taking a look at the Aussie dollar, we are sitting at about 65.75 at the moment. We're also watching treasuries, given it is a big week, of course, when it comes to the decision from the Fed, some of the, of course, turmoil between the president and Fed Chair Jay Powell that's still sort of being worked through, as well as these broader sort of concerns and uncertainty over trade. The dollar index, interesting, did rise on Friday, but did have that weekly loss. So we're seeing a little bit of pass through when it comes to Asian currencies there. Watching dollar China in light of these talks in Stockholm. Also watching treasuries at the moment, but I should also mention crude is seeing a little bit of an uptick in the morning trading session here in Asia, despite weakening through last week. But some of that trade news is clearly benefiting commodities demand too, Sherry.
Yeah, let's start with those negotiations because the U.S. and European Union have struck that trade deal imposing a 15% tariff on most EU exports, including cars. As part of the pact, the bloc will ramp up purchases of American energy and boost investment in the U.S. while sidestepping President Trump's threat of steeper levies.
We've reached a deal. It's a good deal for everybody, I believe. And I think you were saying this is probably the biggest deal ever reached in any capacity, trade or beyond trade.
It is.
It's a giant deal with lots of countries.
We have a deal. We have a trade deal between the two largest economies in the world. And it's a big deal. It's a huge deal. It will bring stability. It will bring predictability. That's very important for our businesses on both sides of the Atlantic. It's 15% tariffs across the board, all inclusive.
Let's bring in Bloomberg News Desk editor Jill Deasy and our China correspondent Min Lo. Jill, let me start with you and the U.S.-EU trade deal. Of course, the devil is in the details, so what do we know so far?
Well, I would say that we're actually missing quite a few details, and there's a few things about this deal that don't entirely seem firm, so I do still think that we have to wait. I mean, obviously, first of all, I have to caveat the fact that trade deals normally take years to ultimately develop and hammer out. We've really only been at this since about April or so. What we do know so far is obviously that overall 15% tariff also applying to automobiles. It certainly does imply that while that's lower than what Trump Trump has been threatening in recent weeks. It is, sort of a bump up from some initial expectations toward the start of the year that Trump would install some kind of a 10% baseline. So, you do have that 15